Hey guys, what's up? Welcome to my YouTube channel today. Okay, I'm sorry, I couldn't resist. Alright, today we're going to be answering an age-old question, okay, that every investor eventually finds himself at the fork in the road. And that is, would you rather take this large lump sum of money in one-time payments, or would you rather invest that one stack and watch it over time grow to 2 stacks, and then over more time grow to 3 stacks? Today we're tackling dividend versus growth with the breakdown of all the pros and cons. Okay, let's jump straight into it. First up is dividends. Dividends are pretty much a stock that you can buy from a company. You buy a share of a stock, and pretty much the longer you hold that stock, that company will pay you dividends. There's some stocks that pay you per month, some pay by quarter, and so on and so on. Okay, so not only does the stock value have the potential of going up for capital gains, but you also get an instant return on your money. So here's the pros and cons of dividend investing, okay? First of all, first and foremost, you get a dividend. I mean, you immediately receive a return on your money. So as soon as you buy that stock, when it comes time for the next payment, whether it is monthly or whatever, you're going to see a little percentage of dividends, go right back into your account. And that's the main factor that makes people attracted to this, is because they can replace essentially their income and not have to work again if they invest it in the right stuff. So anyway, it's another good thing, another good pro about it is it's favorable taxed. It's got favorable tax rates. It's the next best income to have other than ordinary wages and whatnot. Another good thing about it is dividends tend to increase over time, not only with the naturally just buying more and slowly getting higher dividend payments, but also the company tends to raise their dividends as well. So that's a good thing. But dividend investing, it saves you a lot of time, a lot of stress. You don't have to sit here and research a lot of stuff about it. You can find a dividend aristocrat. These are people that have been around for like 20, 30, 40, 50 plus years that have constantly paid a dividend. Those are like safe investments that you park your money into, and you'll constantly just you'll receive dividends from that. So the thing about it though is they tend to be less volatile, which is a good thing and a bad thing. It's a good thing because you don't have to worry about checking the market every day and being up or down. This is kind of more hands-off. Compound interest does its thing over time, more like a long-term kind of approach.
So now on to the cons of dividend investing, okay? First and foremost, you got to pay taxes on dividend accounts, okay? That's literally because they're paying you dividends. So unless you have it in a Roth IRA, which is tax-free, you don't have to worry about anything. But if you are going with dividend investing and you're doing it with the goal to be long-term investing, you are going to have to pay taxes on those. And honestly, at this point right now, since I'm only a year in, I can't really give you guys any glimpse into that side yet. But as soon as I talk to my CPA, shout out to Jill, she's the best one I know of. But as soon as I get that and I find out, I'll be able to give you guys more area of like what entails with the taxes. So, with growth stocks, you don't pay taxes on those until you sell. Okay, so let that be clear. It's not until you sell. But with dividends, you're gonna get taxed on that. Another con of it is the payment isn't guaranteed. And this is a really big one right here. Payment is not guaranteed. So if you say that you go in and you buy 15,000 of O Realty shares to get monthly income, whatever that equates to, I don't have the math, but if you do that and say something like what just happened with this pandemic happens and they cut their dividends or they suspend it or they just do away with it altogether, that's a real issue. You have 15 grand that is now was getting you monthly payments and now it's not. So companies have done that. We've seen Ford, we've seen General Electric do it in the past, where just altogether they've just did away with their dividends. So you got to be aware of that pretty much. And then the last con, the only thing that I can really think of is the possibility of underperformance. So these are more conservative kind of investments because these are giving you money over time, and it's more, it's not really aggressive. Okay, so if you look at O Realty Company, take for example, that is a dividend paying stock that pays every month. Over the last 5 years, if you look at their chart on Robinhood or wherever, you can see that they've only went up from about like $44 to like $65 in 5 years. Okay, that's not a big increase capital gain wise. Dividends, yes, because those whole 5 years you would have been getting little chunks from them. But if you take that into perspective, like it took you pretty much 5 years to make your value go up $20, they don't focus on that. They focus on paying their shareholders, which is the difference between dividend and growth investing. So by investing in that, you may have there may be the chance that they underperform. They underperform compared to you putting that $15,000 in like Tesla or Apple or Microsoft. Whereas you can look back in the 5-year chart and they were down hundreds and hundreds and have shot up hundreds and hundreds. So that's pretty much it. Okay. Overall, I like dividends. I just found out about them. I've incorporated them in my profile. I love them. I love them. But that's the pros and cons of dividend investing. All right, now on to growth stocks, okay? This is very, very short, very simple. The pros and cons are pretty much already listed out if you listen to the first part of dividends, okay? So a little bit was touched on. But first and foremost, let's start with the pros, okay? And that is a single investment in a winner can instantly make you rich. Be careful. Obviously, there's going to be a con after this. Otherwise, everyone in America would be rich. Okay? So, there are some cons. Okay? Normally, these growth stocks, they do not pay dividends. Okay? And if they do pay dividends, it's usually a very, very small amount. It's not really worth an actual, it's not really worth the dividends unless you have some tremendous amount in it. Okay? Now, yes, you can instantly ride Amazon to the top. You could ride Bitcoin to the top. You could ride all these big, big winners that you've heard and heard about, even if you have no investing knowledge whatsoever. Everybody's heard about these big names. Amazon, what's another one? Tesla, you know what I mean? So, yeah, it's you can make a lot of money off of it. You could also lose the shirt off your back. You can lose a lot of money. So that's a main thing, okay? The cons, they don't pay dividends. Everybody always feels like they paid too much for a stock that's a value stock because these growth stocks, they feel like they paid too much. These growth stocks are usually pretty expensive. They're not too expensive, but you're gonna have to put out more money. It's not just a 40 and 60 bucks here. It's sometimes it can look at Amazon. It can get pricey. So they're rarely ever cheap. And usually by the time you hear about people, oh, I got into this stock back when it was, yeah, none of that really matters because that information is useless. I hate when people tell you that stuff like, I got back into Bitcoin when it was only 15 cents. It's like, dude, that does nothing for me right now. That does not do anything for me. Why don't you just say how much you made in Bitcoin? Like, you know what I mean? So, yeah, that's the thing, dude. They're expensive, but you pay for what you get, and it is what it is. So, that's just what it is.